YouTube world? Casey Stone here. Just want to do a brief market analysis recap of what we saw in 22, what we've seen so far here in 23, and what I kind of see as the future and what may be happening in the short and long term here across the upcoming year. Looking back at last year, I am based here in Texas, so I do focus on the Texas market in general. We've pulled data from Houston, HAR, and the Dallas MLS and San Antonio and Austin, and kind of aggregated and got some synopsis and overview of what's going on. Real estate is obviously hyper local, so I can talk about the state in general, but it does matter. In the same neighborhood, houses and prices can vary. Overall, end of last year was crazy with rates going up. And then people's mortgages became unaffordable. So housing started to come down on pricing, which led to inventory stacking up. There was a 50% decline in year over year home sales of November and December of last year versus November and December of 21. That's a big drop happening. It was a fluid market, up and down from foreign activity, with Ukraine getting invaded in the year, and supply chain issues and overall inflation around the world led to our inflation also happening, and we having to have our interest rates bumped up to slow the market, slow inflation, which then really brought down the housing market. The active listings in Austin are up right now, year over year, January 22 to January 23, 462%. There's a lot of houses sitting on the market in January. It is a little bit misleading, a lot of comparing 23 to 22, because 22 was such a gangbuster growth year. So it makes those numbers a little bit more intimidating, but it's still the facts are the facts. Days on market have gone up by 1 to 2 months on average. So we're looking at 2 to 3 months, sometimes 4, which means as an investor, you have to think about your carrying costs and your holding. How long is it going to take you to resell and move that property? And you got that hard money loan. That's expensive money. Every day really costs something. So in calculating that into your acquisition price is really important. A DFW has almost double days on market year over year here in 23 compared to last year, and what's been happening. So that's a huge, big hit to be taking. Houston in January of this year had its 10th consecutive month of housing prices falling, and that's a long streak. I do think that that's going to start to curtail and dovetail off a little bit here, probably into the summer and moving into Q3. But 39% decline in sales year over year in Houston. Again, year over year is a little bit hard with how crazy 22 was, but that is a big stack. If you compare that, a good way to look at that is that it's only a 4% decline to pre-pandemic numbers. So during the pandemic, if you look at that, it's a 39%. But if you go to it's only a 4% drop. So it's still a drop, but it's not the world falling in. All markets were down in January across the state, about a 30% drop, and 30% days on market. Drop there, and days on market are actually up by 94% across the state. So longer holding time, a 30% drop across the state in January year to year, and a longer days on market, which again is just leading to that inventory and houses sitting and things not moving. Active listings across the state are up about 120% year to year. A lot of houses listed. And a lot of people even aren't listing right now because they know that the market is becoming really cold and things aren't moving. So if it was an optional move, they haven't listed their homes. If it's a required move, job relocation, what have you, then they definitely had to list anyways. But still, even with the optional moves not being on the market, we're still up 120% with active listings. Pending sales are down 27%. That's an indicator of what's going to be moving, and a drop of almost 30 is a big hit, which has led to overall all prices falling. Because if you do have to move and it's not an option, then you've got to list it low to get noticed and get moved. Looking to just this year, January was a bad month. No other way to cut it. January had a massive time on market increase. We had high interest rates they did start to come down later. The rates started to dip a little in this year. Beginning of the year in January, it was very high rates. Combined with bad weather across Texas, we had bad weather everywhere, especially Austin got hit hard. DFW got hit. Down here in Houston, not hit as bad, but severe weather, people don't go looking at houses when they're frozen, especially as Texans. So it definitely put a damper on people going to look at houses and the high cost of properties. January was bad. January was really bad. February rates did drop a little bit. Things started moving a little bit quicker towards the end of the month, and Fed. It's just as things start to move and start to go, a little bit quicker, Fed starts to announce they're increasing the rates again. So I think it's going to put obviously a damper and slow back the housing market. A lot of people are predicting that 23 is going to end up being a flat year. I actually think it's going to be a little bit of a drop year, but not the bottom falling out here in Texas. We are a little bit insulated compared to some of the other parts of our country. So we are definitely going to have a drop. A lot of people believe it's going to be a net neutral or just a slight decline by the end of the year. In order for that prediction to come true, rates and house movement would have to pick up. We'd have to be selling more property. We'd have to have more activity because it's been such a drop. If we want to end up back even and neutral, then things have to come up. Most people think that'll happen in Q3. I actually don't. I think inflation is going to keep going. I think the rates have gone up a little bit now. I think they're going to go up again, probably by the end of this quarter. And if not the beginning of next, we'll see another bump on those. And that's going to continue to strangle the market some. I don't think it's going to continue to, it's not going to fall out. It's not going to fall apart, but I actually think it's going to end up a little bit more down at the end of this year than what a lot of people are predicting, is my assessment. I don't have a crystal ball. I'm just kind of reading what I can see in the tea leaves. But there is a lot of demand that's pent up and waiting to explode and to go into the market. But with rates going down, the affordability of your homes are definitely an issue. No matter how much you want to buy, if you can't afford that upcoming mortgage because of that interest rate, then you can't buy, you can't move. There will always be the forced sellers out there that have no choice but to move. Foreign affairs are continue to be an issue throughout the year. Everywhere in the world is going to have inflation going on. So if everybody else is in inflation, we're going to be facing it as well in this global economy. And so rates will stay up. So we will definitely have a lot of high rates, meaning the houses won't move super quick. Basically, what's happened so far this year is that we've lost all the gain that we had last summer. Last summer was a massive increase and massive growth in prices. That's all gone. I think some of it's going to come back, but we're not going to be where we were at the end of this year, where we were at the end of last summer. That won't happen. That'll probably happen by summer of 24, but not by the end of 23. Traditional real estate investing would tell you that 4 to 6 months of inventory is where you start to transition from a seller to a buyer market. The longer that inventory, the more buyer market it becomes. We are under that threshold. We're kind of starting to flirt with it, but so the stats would tell you we're in a seller market, but don't let that mislead you. It is definitely a buyer's market, and that's only continuing to swing in that pendulum. If you follow that metric, we haven't really been at that level since the 08-09 housing crisis. So it hasn't been anywhere like that recently. So I don't even really think that's an accurate gauge anymore. I look at accurate inventory, listings, and demand and all of it. So we are in a buyer's market. So if you're a seller wanting to sell your house, sell it to move. Don't try to go for a top of market price. Don't try to list it at something thinking you'll then negotiate and come down to a reasonable price. Buyers in this market are going to look at a price because that goes to affordability. And if yours isn't priced to move, they're going to move on to the next property themselves. There are plenty of them to go choose from. Your house is not special. Make the price special so they move on to your house. Motivate them with the price, which means as an investor, you need to buy it correctly. Your money is made when you buy, not when you sell. So buy it knowing that you're going to have to hold it longer, knowing that you're going to have to discount it to get to move. You may have to do concessions, a lot more concessions than you ever did before, and giving into your paying buyers closing costs or whatever that entails, because you need to move that property. And otherwise it's going to cost you more holding it, hoping to find that one lucky buyer. There's always that ad, it only takes one buyer to move the house. Yeah, that's not true. Technically it is true, but for you to find that buyer, you're going to have to hold it and wait, and you're gambling, and you don't want to be a gambler. You want to be an investor and making smart decisions. So be a picky buyer when you're buying the properties, and then motivate them to move quickly with your price to something that can get going. And that's what I see for the market. I see it as the time that you need to price your house to move. I see that we're going to have more in growth in inventory coming in the short term. And by end of year, I do think it'll start to pick up where we'll end up on a down year, which is okay. The average real estate cycle should be 5 to 7 years of growth, 1 to 3 years of drop. Nationally, that's kind of what the historians would tell you. Really, we haven't been on those kind of trajectories in a long time. So even though we're moving into a slow drop, people think the world is caving in. It's not caving in, but it definitely have to have that foresight and know what's coming on. So we're not going to be bouncing back very super quickly. This year will end up as a down year is my prediction. I could completely be wrong. I kind of hope I am. But if you know how to do owner finance notes, this is actually a really good market. I hope that was helpful. I hope that gave you some insight into what we maybe see happening from the data that we've been able to analyze and go over. We'd love to hear your thoughts, comments, predictions, how you think we're right, we're wrong, we don't know what we're talking about. Share it. We'd love to know. If you have questions about real estate investing, owner financing, or any other aspects, don't hesitate to shoot us a message or make a comment on a video. Don't forget to subscribe to our YouTube channel and follow us on the other social platforms to stay updated on the ever-changing real estate market. Happy real estate investing!